Yes, a very good morning, right? So let's discuss the MCQs in the MTP2 for the Jan 25 exam. Okay, right? So I'm sure you are on a roller coaster ride watching the videos and, preparing for the exams, looking into the different chapters and also doing the MCQ practice and the answer writing practice. Okay, so shuru karte hai. Case scenario 1. Oval Services Limited appointed Rupa and Associates as the auditor for 23-24. The auditors believe that an audit program is crucial in providing the clear and comprehensive instructions for the task to be carried out, offering a total perspective of the work involved. This is particularly important for the large audits, and as such, they prepare an initial audit program based on the company's organization structure and the effective internal control. During the audit, the engagement partner identified issues with the company's debt management practices, prompting the inclusion of a more detailed review of the loan agreement. However, in his opinion, the planned review of the petty cash was unnecessary due to the company's policy of limiting the cash transaction. This review procedure was removed from the audit program. Right? So we say that whatever is mentioned in the audit program is the minimum essential work which is required to be done. And should there also be the periodic review of the audit program? Can anything be added to the audit program? Yes. That can anything which is not relevant be dropped from the audit program? Yes, you can do the add or the less. Right? When you do the review of the audit program. Then, to verify the balances of the trade payable, the auditor decided to send the external confirmation request to the creditors of the company. So now we can send SA 505. And these requests were made to verify the balances as on 20th of March 2024, a date chosen deliberately to ensure the accuracy and completeness of the liability, free from any influence or prior knowledge of the management. This approach was taken to maintain the integrity of the confirmation process. So rather than asking for the confirmation as on 31st of March, the auditor has decided to ask for the confirmation for the balances as on 20th of March. This approach was taken to maintain the integrity of the confirmation process. However, it was noted that Keshav traders and the Amrit distributors did not respond to the confirmation request, right? So that's a non-response. Further, the auditor noted that in the financial year 23-24, the company's PPE was revalued, resulting in an increase of 5% in the net carrying value of its machinery from 10 lakh to the 10.5 lakh, right? So here they are talking about the clause 1D of the CARO, right? Whether any revaluation has been done of the property, plant, equipment, or the intangible assets or book. Then also due to the significant compliance burden, company is considering to convert into an LLP. Management views the LLP structure as a hybrid business model that combines the advantages of both companies and partnership. Additionally, they believe this conversion would relieve them of the mandatory audit requirement. No, but for LLP also, beyond a particular amount, an audit is required to be done. Right? So that is regarding the LLP audit, right? So look at the, inclusion in the question. One regarding the audit program, then the external confirmation, then regarding the CARO, then after that regarding the LLP audit. Okay. Based on the above facts, answer the following. Whether audit team is correct in excluding the planned review of the petty cash from the audit program. Right? So what do they say? They have decided to do the more detailed review of the loan agreement. And they have also decided that the planned review of the petty cash was unnecessary due to the company's policy of limiting the cash transaction. Right? So they're doing some plus minus in the audit program. No, because an audit program should always include a petty cash review regardless of company policy. Yes, because the company's internal control and policy of limiting cash transaction reduce the need for a petty cash review in the audit program. No, because the audit program must cover all the areas of financial transaction, including petty cash, to ensure comprehensive auditing. Yes, because the audit program should only focus on areas with high financial risk, and petty cash is not a high risk area. Right? So again, do we say no because, is it correct in excluding the same from the audit program, right? So it says because it is the controls are effective, the transactions are limited. That is why we are considering the elimination. So is it the elimination because it's not a high risk area, or is it because the company has the internal controls and policy of limiting the cash transaction, right? It is because of the internal control and the company having the policy of limiting the cash transactions. Okay. Whether the decision of the auditor to send the confirmation request to the creditors of the company as on 20th of March justified. Yes, decision of the auditor is correct, as the auditor is allowed to choose any date reasonably close to the balance sheet date for confirmation, and the selected date helps to ensure the accuracy of the liabilities without consultation from the management. We cannot do any activity without the consultation from the management. The control over the confirmation process is of the auditor, but it has to be done in consensus with the management. No decision of the auditor is not correct, as the auditor should have sent the confirmation request for the balance sheet date, as this would accurately reflect the liabilities as on that date. No, for many companies, rather than, because there is less time to do the audit and issue the audit report after 31st of March, if company has a reporting deadline. So many company auditors, they go for a hard close, right? Like they do the entire audit up to for 11 months, like say up to 28th of February. And in the month of March and of April, they'll do the audit of that 1 month, right? Which is called as a hard close. Right? So again, like inventory, also we say physical verification can be attended on an alternative date, and additionally, you can check the intervening transaction. Right? So here also they can call for the creditor confirmation as on 20th of March, and then whatever transactions have taken place between 20th to 31st of March, those can additionally be checked. Okay. If decision of the auditor is correct, as the auditor is allowed to choose any date which is reasonably close to the balance sheet date for the confirmation, and the selected date should be decided in consultation with the management. So here it says without consultation, here it says in with consultation with the management. And no decision of the auditor is not correct, as confirmation should be asked within a week of the date of the audit report, right? So this is a very lame excuse. Right, so which is the correct option over here? Yes, the decision is right, but only it should be done in consultation with the management. Okay, which of the following is not appropriate audit procedure? NOT, not an appropriate audit procedure to verify the balances for Keshav traders and the Amit distributor. Right, so now what happened in case of these particular creditors? The response has not been received, did not respond to the confirmation request. Right, so which of the following audit procedures should not be performed? Right, so breaking down the balance into the individual transaction and making sure that they actually happened. Right, so this could be called as an alternative audit procedure. Right, checking payments made after the year end to the vendors who didn't respond to the confirmation request. Right, so you're doing the subsequent payment testing. So that's again an alternative audit procedure. Comparing the balances to the original invoices from the vendors. So again, because we have not confirmed the balance, now you're checking the invoices. And then request a written representation from the management confirming that all payables are accurately recorded and complete. What do we say? Written representation is not a substitute for the normal audit procedures to be performed by the auditor. Right? So procedure number 4 is the procedure that would not be appropriate. Right, whereas checking the breakdown, the ledger extract, then after that the payment, the invoices, all this would be right. Right, all of this would be right. In the given case, is there any requirement for the separate disclosure of the PPE revaluation? Right, so if there is a change of 10% or more for each class of the PPE, right, on a net carrying value basis, it is required to be disclosed. Right, so here what does it say? Yes, separate disclosure is required due to 5% increase. No, it is not 5% in Tharo, it is 10%. Right, then it says no separate disclosure is required unless the revaluation results in a material change. No, it has been defined as 10%. Yes, so yes, separate disclosure is required regardless of the percentage change. No. So no separate disclosure is not required as the change in the carrying value is less than 10%. Right, as it is less than 10%. And what is your perspective on the management's view regarding the audit requirement for an LLP? An LLP is always required to conduct an audit regardless of its turnover or capital contribution? No. An LLP is required to conduct an audit if either the turnover exceeds 40 lakh or the capital contribution exceeds 25 lakh. A LLP is required to get an audit done if turnover exceeds 25 lakh or capital contribution exceeds 40 lakh? No. And an LLP is required to get an audit done if the capital contribution exceeds 25 lakh and the turnover exceeds the 40 lakh. Right? So here there is an or and here there is an and, right? So it is or. And any one of the limit exceeded and the LLP is required to get an audit. Right? The LLP is required to get an audit done. Okay. Right, let's come to the next one. Listen attentively, everyone. That's great. Okay. Right, so case scenario 2. Shreyans, a chartered accountancy student, is part of an engagement team conducting the audit of the Coimbatore branch of XYZ Bank under the guidance of CA Dilip, the engagement partner. Shreyans has been assigned the task of verifying provisions made for the branch NPA and classification of certain loans as on 24, of which details are as under. Right, non-performing asset, name of the account, NPA classification, outstanding amount, amount of provision, security available. Right, so doubtful, substandard, doubtful 2, and then after that loss asset, outstanding amount, amount of the provision, fully secured and only personal guarantee of the proprietor, net worth is 50 lakh. Okay. Housing loan and car loan. A borrower, Mr. Sham, has also availed following 2 loans from the branch. Housing loan EMI are overdue for 120 days and car loan EMI are overdue for 60 days. Right? So one of them is overdue for more than 90 days. And what do we think? NPA classification is to be done borrower-wise and not facility-wise. Okay. Right. So the branch has provided a loan of 20 lakh under the Kisan credit card scheme to a farmer for the cultivation, which has a harvest period of 3 to 4 months. There has been no transaction in the account for the last 90 days. The branch has classified the loan as a standard asset. Right, so for agricultural advances, we see for short duration crop overdue for more than 2 crop seasons and long duration crop overdue for more than 1 crop season. Okay. CA Dilip has clarified that the NPA classification has been verified and is in accordance with the RBI guidelines. He instructed Shreyans to focus on evaluating the adequacy of the provision, considering the RBI guideline mandate specific percentages for provisioning based on the NPA classification and the nature of the security. Based on the above facts, answer the question. Is the provision made for AB Industries doubtful asset appropriate? Right, so doubtful B1, up to 1 year, 25% provision is required to be made for the fully secured portion. Right, so 10 lakh and of that 25%, so it should be 2.5 lakh. Right, so 2.5 lakh. Yes, as it exceeds the required 25% provision, no, it should be 40% of the outstanding amount. No, as required provision is 2.5. Yes, as the provision can exceed the minimum requirement. No, the provision required is 2.5 lakh. Okay. Considering the housing loan and the car loan availed by the borrower Sham, which of the following statement is appropriate? Both housing loan and car loan should be classified as NPA in accordance with the RBI norms on the asset classification. Because what do we say? NPA classification is to be done borrower-wise and not facility-wise. Housing loan should be classified as NPA, car loan should be classified as standard. No. Car loan should be classified as NPA, housing loan should be classified as standard. No. Both housing and car loan should be classified as standard. No. Right. What is the minimum provision requirement for RS enterprises, D2, considering the account is fully secured, right? So now talking about the D2, right? So now D2 is 1 to 3 years. So for that, how much? 40% provision is required, right? So that is coming to the 12 lakh, right? So 30, 12, 15, 25, it is 12 lakh. And as regards the description of the agricultural advance under the Kisan credit card, which of the following statements is most appropriate? It should be classified as substandard. The classification made by the branch is proper. However, since there are no transactions in the account for 90 days, it is a special mention account. Classification made by the branch is proper. Branch has erred in making the classification. It is a doubtful asset. So no substandard, no doubtful. It is a standard asset. Right? It is a standard asset. Okay. Right. Let's come to the case scenario 3. MTP associates are having 3 partners, namely Mahavir, Chandana, and Prabha. Mahavir is about to conclude the audit of a company. During the audit, he noticed that there is a shortage of important raw material supply being imported from China due to prevailing geopolitical conditions. The company has shared with him its plan to deal with the situation. He is satisfied with the assessment of the company for dealing with the matter. the issue is disclosed in the financial statement, and considering management's assessment, it is felt that use of going concern assumption by the company in the preparation of financial statements is appropriate. Right? He also verifies that all subsequent events have been accounted for and requested representation from the management, also representation defined language. Significant findings were communicated both orally and in writing to TCWG, with the relevant communications being documented. Right? So they are trying to address SA 570, SA 560, SA 580, SA 260. Going concern subsequent events, written representation and communication with TCWG. Chandana is conducting an audit of a manufacturing company dealing in towels and bedspreads. The company's inventory spread across its own location and third-party premises. As a part of audit procedure, she is performing many audit procedures required by different FA. She attends the physical inventory count, sends the confirmation request for the trade receivable, and assesses the control. She relies on sampling extensively while auditing transactions, balances, and control. Right, so she attends the physical inventory count. So that is 501, specific consideration for selected items. Sends confirmation request. So that is 505, external confirmation. Relies extensively on sampling. So that is SA 530. Okay. Prabha is auditing a firm's financial statements and perform detailed procedures to verify assertion. The firm is engaged in export of goods to Europe. The sales invoice raised in the euros are converted to Indian rupees as per the applicable norms. She checks the classification of expenses, ensure trade payables are genuine, compare current and past wages, examines title deed for land, and check the accuracy of the calculation of the conversion of the foreign currency into the Indian rupees for the export invoices, right? So that is regarding the items of the financial statements, the sales and also the trade payable. Okay, now based on the above fact, answer the following question. And they are also talking about assertion. So that means SA 500 audit evidence. My God, such a beautiful drafted MCQ over there. Case scenario. Which of the following best describes, right? So generally, sometimes they ask not, but here they say best describes Mahavir's responsibility for subsequent events as per SA 560. He has no obligation to perform audit procedures for events occurring between date of financial statements and date of audit report. No, he has to perform the audit procedure, right? So make inquiries of management, read latest, and obtain written representation. He should perform the NAP, the necessary audit procedure, to know about events occurring between the date of financial statement and the date of audit report. So here they say no obligation. Then they say necessary audit procedure. Again, he has no obligation to perform audit procedures after signing the audit report, even if he comes to know of an event, which if known to him earlier would have caused him to amend the audit report. No, this is called as facts as per SA 560, which you need to respond appropriately. Right? So now again, can you say no obligation? No. He has to only rely upon the written representations of the management regarding subsequent events. He has no other means to know about such events. No. So you need to perform the audit procedures. Which audit procedure? The necessary audit procedure. Inquiries of the management. Then you read the latest and you also obtain the written representation as a supporting audit evidence, not as the main audit evidence. Okay. Question number 11. Which is the most appropriate action a CA Chandana should take for verifying inventory held at the third party premises? So, pehle bola best. Now they say most appropriate action. Right? So, which is the most appropriate action CA Chandana should take for verifying inventory held by third party? Request confirmation of the inventory quantity and condition from third party, or inspect the inventory at their premises, right? So either get a confirmation from the third party, or you go and perform inspection of the inventory lying at the third party. Inspect all the inventories at third party premises without requesting confirmation. No. Rely on management representation regarding inventories at third party location. No. Confirm the inventory value along with its quantity and condition from the third party. So no, right? Which is the most uchit, most appropriate procedure? Request confirmation of the inventory quantity and condition from third party, or inspect the inventory at their premises. Okay. Right, question number 12. Which audit procedures ये प्रभा perform to verify whether conversion of the foreign currency into Indian rupees is proper or not. So management would have already done the conversion of foreign currency into Indian rupee, and CA would have performed it again, right? So is it inspection, right? Or is it the recalculation or the observation or the reperformance? Right, so obviously they have already done the calculation, and auditor would have done the calculation again. So it is going to be the recalculation, right? It is going to be out of ICAIORR. It is the recalculation, right? It is the recalculation. Okay. Question number 13. Kamal, a partner of KPS and company, is conducting an audit of Riddhi Limited, a manufacturing company. During the audit, it was found that KPS and company generates 72% of its total revenue from Riddhi Limited, raising concerns about the firm's financial dependence on a single client, right? So here there is a self-interest set that, wherein there is an undue dependence on the client for the fees. Okay, identify the kind of threat to the independence that may be involved in this case. Is it familiarity, self-interest, self-review, or advocacy? It is the self-interest threat. You see, generally these threats to the independence of the auditor, FSSAI, it's a very, very favorite topic of the ICAI for the question. Right? So this particular topic on independence, you need to study it well, learn it by heart, and also do the writing practice, and also solve the MCQs for the, okay. Auditor is evaluating the most appropriate method to assess the internal control system of the company. Right? What are the methods for the evaluation of the internal control system of the company? Narrative record. We have the narrative record, or we have the checklist, or the internal control questionnaire, or the flowchart. Right? Narrative record, it is a written description. Checklist, it is a series of instructions and or questions to be followed by the auditing staff. Internal control questionnaire, it is a set of questions to be answered by the client staff. And flowchart, it is a graphic representation. Okay. The selective method should be widely recognized for gathering information about the existing operation and efficiency of control, while also minimizing the risk of oversight of important review procedure. Furthermore, the method should facilitate easier interim review of the control. Which method would be most appropriate for evaluating internal control based on the description provided above? Right. So one for sure, it cannot be flowchart and narrative record. Right. So it has to be between the ICQ and the checklist. Now you want to do an interim review of the control. Right. So that is where you can provide the questionnaire to the management. And again, you want to gather the information. So for that, you need to send the questionnaire to the right, for the client to answer. And the last one, question number 15. Gauri told her friend that she had read a news report about how a company has misled its auditor by producing some fabricated, tampered documents. Which of the following statements seems to be appropriate in this regard? Right, so auditor has to conduct audit by exercising professional skill, but he is not an expert in discovering the genuineness of documents. Hence, management consisting of dishonest persons may have led him to rely upon fabricated documents deliberately. It was wrong on the part of the auditor to rely upon fabricated documents. He must have discovered as it falls within the scope of his duty. We say auditor is not an expert in the authentication of documents in our inherent limitations of an audit. Management cannot mislead auditor due to high level of knowledge and expertise possessed by him. The above is an outlier case, one of the rare odd cases. No, so management can mislead the auditor. Although it was wrong on the part of the auditor to rely upon fabricated documents, he cannot do anything in the matter. He has to report on the basis of documents provided to him. He has no duty in this regard. No. Right? So you at least have to be a watchdog, a sniffing dog, if not a bloodhound. Right? So auditor has to conduct the audit by exercising the PCDC, professional competence, and the due care, professional skills. He is not an expert in discovering the genuineness of documents. Hence, management consisting of dishonest people may have led him to rely upon fabricated documents deliberately. So that is why we say that fraud is more difficult to detect than an error. Management fraud is more difficult to detect than an employee fraud. Okay. right? So I hope you are able to catch the potential, what you say, the momentum at which we are discussing the MCQ. You know, you've done a lot of your relaxed studies and enjoyed chewing a few chapters aram se, but now the time has come up for you to roll up your sleeves and take up the momentum in your preparation for the CA teacher exam. Right? So see you in the next video.